All right, Warren Buffett on why Wall Street is wrong on inflation. All right, someone sent this to me, and I chuckled when I read this article by Margaret Moran. Dateline just the other day, 22nd of June. All right, and look, oh my goodness, hot air balloons are crashing because they're coming down from gravity. Gravity's taking the hot air. That's funny. All right, so let's read this because I had a chuckle. As inflation soars unchecked in the U.S., historical precedent would tell us that Wall Street should be panicking right now. But it's not. It's doing the exact opposite. Even as the CPI has topped 8%, Wall Street maintains buy ratings on 57% of the stocks in the S&P 500, compared to sell ratings on just 5%. This many bullish ratings would be considered highly unusual even in good market conditions. The 5-year average for buy ratings among S&P 500 is slightly lower at 53.3, but even this is unusually high. FactCheck, or SET, has been collecting data on Wall Street ratings since 2010. According to this, Wall Street is more bullish now than it's been in the last 12 years. Wow. Since 2010, after we came out the second largest decline of the markets we've ever seen. Wall Street is notorious for being bullish on the markets. Why? Because the history of the stock market is quite simple. Permanent gains with temporary losses. Permanent gains with temporary losses. But it's always going up. Now, I don't know if they'll continue to do that, but that's what Wall Street sees, and that's what they're bullish. They say what it is right now, we expect it to be higher 3 to 5 years from now. That's simple. That's where bullish. I mean, you should be too. It doesn't matter if it's high inflation, low inflation, anything. It says, do we think there's going to be markets that go up 3 to 5 years or down? We think they're going up, we're going to be bullish. Done. End of story. And I am too. And you should be that way as well. So this is idiotic. So what has made of Wall Street's what has made Wall Street fond of inflation all of a sudden? Huh? They're fond of inflation because right now they have 56% buy ratings and normally they have 53. Okay. It just, look, man, only rookies think that Wall Street hasn't, I don't say manipulated, been bullish on stocks. They're always bullish, man. They've always been like that. They always have more buys than sales by a huge factor. And then neutrals. So you got buys and majority, neutrals, 35% neutral, and then 5 to 10% sell. That's it. Why? Because the Wall Street says in 3 to 5 years the market should be higher. We want to be part of that. Pretty simple stuff. Let's see. Before we dive into that, why Wall Street is wrong, we should remember that, as Warren Buffett once said, when trillions of dollars are managed by Wall Street charging high fees, it will usually be the managers who reap outside profits. I don't know that to be true. Look, I can bash Wall Street the best of them, but this is just idiotic. Hedge funds, sure, but regular Wall Street at Wellesley and Wellington Capital Management, it's dumb. All right, so the more bullish the market, the better Wall Street profits are. So it comes as no surprise that some analysts were intentionally issuing more bullish ratings in order to prop up investor sentiment. Oh, Margaret. Oh, how do Wall Street people get paid? They get paid on transactions, no? So when there's a buy side, that means there's going to be a sale as well. Someone's buying it from somebody else. There's a buyer and a seller. It's a transaction. There are two sides of every trade, Margaret. So if you want to issue sell, there's going to be a buyer. Let's see. But that's not the only factor at play is shenanigans on Wall Street. Thanks to record easy money policies and fiscal stimulus, consumers gain an unusual amount of short-term resilience to inflation, but that won't last forever. It's easy to be tricked into thinking sales are improving when the numbers are up, even though they're not, because of inflation. The market situation has created an illusion of strength that's all too easy to buy into. It's what we call projection, my friends. Buffett on inflation. Seeing high inflation as a good thing is a dangerous trap for investors to fall into. Who said high? This is a straw man. Oh, these guys are wrong because they say high inflation is a good thing. I'm trying to say who said that, Margaret? Let's see the evidence of who said that. Well, the evidence is the Wall Street buy ratings. Okay. So were they not having high buy ratings when there was low inflation? All right, in a Fortune magazine article in 1977, Buffett said, the arithmetic makes it plain that inflation is a far more devastating tax than anything that's been enacted by our legislature. The inflation tax has a fantastic ability to consume capital. It makes no difference to a widow with her 5% savings account where she pays 100% income tax, or if she has a 5% inflation with no income tax. Either way, she is taxed in a manner that leaves her no real income whatsoever. Oh, that's such an idiotic thing to say. And it does surprise me. I've never been that fond of Warren Buffett, to be honest. He's just a nice old man. No, he's not. He's not a good person. He's not. All there's to it. Anyway, think about how idiotic that is. All right, so you and I are sitting here. I'm sitting right here. I got $100,000 on my savings account, and I'm getting 5%. That's $5,000 that the government takes. There's 100% income tax on my interest. So I have $100,000. I make $5,000. That is shuffled back to the treasury. All right, you have $100,000. All right, but now inflation, according to Warren Buffett, is going to cost you $5,000. So after your 5% interest, you're going to lose all that to inflation. That's just idiotic. Why? Because not all products go up the same rate, Warren. That basketball right there, which y'all can't see, doesn't just go up by 5% as well as my soil right there. If we don't have these things going up together as everything goes up in unison, that's stupid. In fact, you see what the price of lumber is doing there, big guy? It's way, way down from where it was when it was high. Right there. And unfortunately, we already locked in the price on that, which stinks, but, be that as it may. It's idiotic. We have, in economics, we call this thing called substitution effect. The price of beef goes up, so you substitute with chicken. The price of chicken goes up, you substitute with pork. The price of pork goes up, you substitute it with soybeans. It's called substitution effect. Not everything goes up in unison. And to say that the taxation is the same as the inflation is just mind-bogglingly stupid. On top of that, let's look at something else. Here's CPI without including energy and food. All right, so, or energy and, maybe it is, no, I don't think there's, no, they are including food and beverages, but energy and maybe it's just without including energy, whatever it is, I don't care. It doesn't matter, because see what the biggest cause of CPI is? Housing, right there, housing. Okay, my housing costs haven't changed an iota. Well, that's not true. My property tax did go up $400. $400 in property tax increase. That's it. I got a fixed rate mortgage on this puppy. My housing costs haven't gone up at all. So this 42% CPI is not effective to me. It's just simply not, or attributable to me, because my housing cost is fixed. So I do not pay an increasing housing cost. Now I do pay a higher gas bill, a higher food bill, all these things here. But the biggest component of CPI is housing. So to sit there and say 5% inflation is the same as 100% tax if you made 5% on your interest is freaking stupid. Because my personal inflation rate is different than yours and different than that guy's and different than that guy, but based on our consumption habits. And if you're in a fixed rate house, that CPI is irrelevant to you. Bringing this example forward to 2022, we're essentially paying 100% income tax on any return that does not surpass inflation. So this is even stupider. We know for a fact what the rate of return on bonds are going to be. It's whatever the current rate yield is. That's their rate of return. There's no more, no less. That's just a fact. So if the rate on bonds are paying 3%, we know for a fact that according to market, there should be a bunch of sell-side analysts on Wall Street saying sell your stocks and buy bonds? It's stupid, man. Bonds aren't going to beat inflation. The bonds that you bought in 3, 4, 5 years ago, last year, today, because we know exactly what they're paying. Stagflation of the car. Some analysts say they're not worried about inflation because they expect it to subside soon. Get out of here, buddy. Let's see. On the other hand, what Truman said, I just want a one-handed economist, because all the economists that were dealing with President Truman said, we could go into a recession. On the other hand, we could go into growth. And he said, I just want a one-handed economist. I don't want to hear that on the other hand. Anyway, the situation called stagflation last occurred in the 1970s. The likelihood of stagflation has further increased due to Russia's war in the Ukraine, or NATO's war in Russia, however you want to look at it. According to the World Bank, the Global Economic Prospects report, global growth is expected to fall to 2.9% from 5.7%. CBO is suggesting that GDP will drop as well. The last time U.S. experienced stagflation, Buffett waited until November 1st, 1974, to declare a bullish call on the stock market. Okay, well, he called it right, but that doesn't mean, I was 4 years old. I'm 50, going on 52. All right, so he called it right, just like what's his name there, Schiller called it right when he said there's when he published Irrational Exuberance in March of 2000. All right, now is the time to invest and get rich, he said. All right. The history of steep recessions followed by long-term stock market gains could be part of the reason why Wall Street is so bullish on inflation. I'm done with this lady. So basically what she's saying is you shouldn't be bullish because the market, we haven't hit a recession yet. The market, Margaret, is already down 25% from its high. That is an extraordinary thing. It doesn't happen often. Once every 3 to 4 years or so, 4 to 5, the market goes into a bear market. This is our third bear market if you calculate Q4 2018, which you should, in the last 5 years. That's pretty extraordinary. So to sit there and say the market is not, they're not accounting for the recession's already been priced into this. Anyways, it's fucking stupid. I hate stupid articles. It drives me up the flipping wall because it's not logically, it just makes no sense other than emotions. I'm in there for the long term. Do I think the stock market has upside? Yes. Do I think I could be wrong? Yes. That's why I have Wellington. All right. Love your thoughts. We'll see you.